Welcome to Friday Takeaway. This week I analyse two sides of a deal that looks sweet for both sides, i.e. Scientex and Daibochi, but on closer scrutiny has important nuances. But before that, British Prime Minister Theresa May secured cabinet approval for her Brexit deal this week. But next up is a battle in Parliament which experts say could shake her Conservative Party government and set the UK on course for a disorderly withdrawal from the EU. Her plan, which keeps the UK bound to the EU for many years, even after formally leaving in March, is expected to come under intense scrutiny in Britain's Parliament, even as she cuts it close to the March 29 date of the UK's exit. Now, likely in response to slowing growth due to her trade spat with America, China is studying and will implement tax cuts of a larger scale and more significant fee reductions for companies, following on from having already lowered tax burdens for exporters, cut import tariffs for machinery and raw materials earlier this year, and allowed the currency to weaken to help stem the fallout from a trade war. Malaysia has been cheated by the American Wall Street bank Goldman Sachs, according to Prime Minister Tun Dr. Mahathir. Goldman reaped over $600 million in fees when it arranged bond deals for Malaysia in 2012 and 2013, with critics saying these bonds were badly mispriced and improperly disbursed. Now Malaysia is stepping up pressure against Goldman to return the fees, even as one of its own, former Southeast Asia chairman Tim Leissner, pleaded guilty to DOJ charges. Developments which have seen Goldman's stock tank to levels it hasn't seen in a while and over $5 billion in market value vanishing. Bitcoin dropped more than 10% this week and fell below $6,000 to hit a new low for the year. Bitcoin's rivals also fell sharply, with experts blaming a looming split in a separate digital currency called Bitcoin Cash, which triggered the broad decline. Now, Bitcoin Cash itself, an offshoot of Bitcoin, has fallen nearly 90% since last year's peak, likely because large investors sold Bitcoin to cover the risks of a fall in the value of their Bitcoin Cash holdings. So in this week's This or That, it's the story of two sides of a proposed deal. Plastics and property company Sign-Tex is proposing a buy-in of 42% into smaller rival flexible packaging firm Daibochi Berhad. The deal is good for one and bad for the other. But which is which? Let's begin. Founded by businessman Lim Teck Meng in 1968, they started out making PVC sheets, later venturing into industrial and consumer packaging, car interiors, green energy products, and property development. Now, 50 years later, the family have built Scientex into one of the top 3 global producers of packaging materials, worth over 4.2 billion ringgit. Scientex have announced plans to buy a controlling 42.41% stake in rival flexible packaging company Daibochi Berhad. That's a deal worth 222.5 million ringgit and is great for Scientex as no cash is needed, with the acquisition set to be satisfied via a pure share swap on the basis of one new Scientex share for every 5.5 Daibochi shares, since Scientex is so much bigger than Daibochi. Plus, Scientex gets control with just 42.41% instead of the usual 50.1% because of the fragmented holding in Daibochi. But perhaps most importantly, Scientex gets an immediate bump to earnings as Daibochi has been consistently producing between 25 and 30 million ringgit in net earnings for the last 10 years, which is very roughly a 5% increase on profit for Scientex on the basis of last year's numbers. Well, the thing is, this is nowhere near a done deal. First of all, it's a heads of agreement, which means that it's non-binding on both parties, and there are a ton of conditions to pass, including shareholder approval, including for the issuance of new shares in Scientex, plus regulatory clearance from both Bursa Malaysia and MITI. And of course, there's the requisite due diligence on Daibochi. I see 4 analysts covering Scientex on Bursa Marketplace, of which 1 is a strong buy, 2 are a hold, and 1 is a reduce. TA Research's main readout is a sell with a target price of 7 ringgit, while Kenanga is market performed with a target price of 8 ringgit 50 cents. The median target price, however, is 8.87, which means that at current levels of around 9 ringgit per share, you're staring at some potential losses if you pick up some Scientex now. Now, like Scientex, Daibochi produces flexible packaging products like plastic bags and packaging materials for food, fast-moving consumer goods, drinks, and the industrial sector. But it's also much smaller in market value terms. At around 651 million ringgit in market value, they are just 1/7 of their acquirer size. Now, analysts say the acquisition makes sense for Daibochi, but you know what? In all honesty, not really. This proposal only values Daibochi at 20 times earnings when it currently trades at 26 times, and the offer value of 1 ringgit 60 per share is nearly 20% lower than its 5-day moving average. I guess it's a reflection of the pressures smaller manufacturers are facing right now. As well, Daibochi just announced third quarter net profit that fell 21% to 5.7 million ringgit on higher raw material costs, while 9-month net profit have also dropped despite revenue rising. And that's quite a contrast to Scientex's record financial performance for fiscal 2018, which it announced in end September when it posted 290 million ringgit on 2.6 billion ringgit in annual revenue. So I guess selling, while painful, kind of also makes sense for Daibochi's owners. It's not all dire for Daibochi though. MIDF Research notes that Daibochi has installed new flexographic printing machines at their plants in Jazin and Ayakoro, which ups efficiency and cuts cost. While there is also additional space which increases production capacity with room of 50 to 60% more floor space for future expansion. Plus there remains a cost pass-through mechanism agreement with your MNC customers, with higher selling prices to come in the next few quarters. And their Myanmar plant is on track to potentially double production by end 2019 to not only service MNCs based there, but also to serve Daibochi Malaysia's price-sensitive customers. Now Daibochi isn't widely covered, just two analysts on Bursa Marketplace. One is a hold and the other is a reduce. Median target price for Daibochi is around 181, which at current levels of around 169 for Daibochi means there's a little upside in the immediate term, but more down the line if this deal with Scientex goes through. And that, I guess, is the main reason why Daibochi's vendors are taking stock, not cash, for their holdings.